Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Big news from one of Singapore's largest property developers today. City Developments Limited, trading under the ticker C09 on the SGX, has seen its family drama come to an end. The company's executive chairman, Kwek Leng Beng, announced yesterday that he's dropping his lawsuit against his son Sherman Kwek and 6 other board members. This father-son dispute started back on February 26th when the elder Kwek filed court papers against Sherman, who serves as the group's CEO. The lawsuit accused Sherman of orchestrating what Kwek Leng Beng called an attempted coup at the board level by appointing 2 new board members without proper approval from the nomination committee. The conflict had seriously hurt CDL's stock price, which tumbled to a 16-year low. The company even lost its position as Singapore's most valuable publicly traded property developer after several analyst downgrades. But now, peace has been restored to the Kwek family business. In a statement released late Wednesday, Kwek Leng Beng said, "I will continue in my role as executive chairman, and Sherman Kwek will continue as group chief executive officer. All the current directors, including Jennifer Duong Young and Suyen Wong, will remain on the CDL board." What's interesting here is that the 2 directors whose appointments sparked this whole conflict will stay on the board. The elder Kwek added that all board members have agreed to put aside their differences for the greater good of CDL and its stakeholders. For those who don't know the background, CDL is a property giant with a market value of about 3.4 billion. It was founded in 1963 and acquired by Hong Leong Group in 1972. The Hong Leong Group is a Southeast Asian conglomerate founded by Kwek Leng Beng's father, Kwek Hong Peng. The Kwek family fortune is estimated at more than $11 billion. Looking at the technical picture, CDL shares opened 4% higher today after the announcement. This is a welcome relief for investors who've watched the stock drop 14.3% over the past 12 months and a painful 47.5% over the last 5 years. The resolution of this corporate governance issue removes a significant overhang on the stock, though the company still faces challenges in its property portfolio, particularly with its UK investments. Trading volume spiked yesterday as investors reacted to the news, and we're seeing continued strong interest today. The stock is finding support at current levels, though it remains well below its 52-week high. Moving on to Mapletree Logistics Trust, which trades under the ticker M44U. This logistics-focused REIT announced yesterday that it's selling its property at 31 Penjuru Lane for $7.8 million. What caught my eye here is that the sale price is 6.8% above the property's latest valuation of $7.3 million as of November 28, 2024. That's a nice premium in today's market. The property itself is quite old. It comprises a 3-story warehouse with a building age of around 35 years, and another warehouse which is around 28 years old. The property sits on a plot of land with only about 7 years left on its lease. Given the short remaining lease, this looks like a smart move by management. MLT's manager explained that this divestment aligns with their strategy to rejuvenate the portfolio by selling off assets that no longer fit their long-term vision. The capital from this sale will give MLT more financial flexibility to chase investment opportunities in high-specification modern logistics facilities with better growth potential. For context, MLT was the first Asia-focused logistics REIT in Singapore, listed on the SGX back in July 2005. Its main strategy is to invest in income-producing logistics real estate across the region. As of December 31st, 2024, MLT had a portfolio of 183 properties across Singapore, Australia, China, Hong Kong, India, Japan, Malaysia, South Korea, and Vietnam, with assets under management totaling $13.4 billion. After this divestment, which is expected to be completed by the second quarter of FY 2025-2026, MLT's portfolio will consist of 176 properties. The trust has been quite active in recycling capital lately, with several other divestments announced in recent months, including properties in Malaysia and Singapore. From a trading perspective, MLT shares have been relatively stable lately, trading in a tight range. The stock offers a dividend yield of around 5.5%, which is attractive in the current interest rate environment. With logistics remaining a strong sector due to e-commerce growth, MLT is well positioned for the long term, especially as it continues to upgrade its portfolio quality. Our third highlight today is Boustead Singapore, trading under the ticker F9D. The company just announced a major strategic move that could reshape its real estate business. Boustead's subsidiaries have entered into a master share subscription agreement with Hong Kong-based real estate company Unified Industrial to form a new logistics platform called UIB. As part of this deal, Boustead has agreed to transfer its fund and property management businesses to Unified Industrial, and its subsidiary BP Unity will take a 24.1% stake in Unified Industrial. This is a substantial transaction. Around 35.5 million new ordinary shares will be issued with a total subscription value of $78.6 million. The impact on Boustead's financials looks positive. On a pro forma basis, assuming the transaction had taken place at the end of the company's last financial year, March 31st, 2024, the deal would have lifted Boustead's net tangible assets attributable to owners from $502.5 million to $524.2 million. Even better, earnings per share would have increased from 0.134 to 0.168. The new platform UIB will target real estate opportunities in high-growth sectors, particularly logistics and data centers, both experiencing increasing demand driven by e-commerce, digitization, and regional supply chain realignment across Asia. What makes this partnership interesting is how it combines Unified Industrial's established North Asia presence with Boustead Project's Southeast Asian business to cover key markets across Asia. With this broader geographic footprint and expanded expertise, UIB will manage assets worth $3.5 billion across Japan, China, Singapore, and Vietnam. Wang Yu Wei, Deputy Chairman of Boustead Projects, explained the strategic rationale. Boustead Projects has been on the lookout for suitable opportunities to scale up our real estate and fund management business. The creation of UIB allows us to combine forces as partners and ramp up the business, integrating our respective capabilities to further expand across key Asian markets. For those not familiar with Boustead Singapore, it's a diversified engineering and technology group with a rich history dating back to 1828. The company operates across various sectors including energy engineering, real estate solutions, geospatial technology, and healthcare technology. From a trading perspective, Boustead shares have been on a steady uptrend over the past year, outperforming the broader market. This strategic move into the high-growth logistics and data center sectors could provide further momentum for the stock. The technical indicators suggest continued strength, with the stock trading above both its 50-day and 200-day moving averages. For investors looking at these three companies, here are my key takeaways. For CDL, the resolution of the family dispute removes a significant uncertainty, but the company still faces fundamental challenges in its property portfolio. The stock might see a short-term relief rally, but longer-term performance will depend on execution and market conditions. MLT continues to demonstrate disciplined capital recycling, selling older properties at a premium and reinvesting in modern facilities. This strategy should enhance the quality and sustainability of its income stream over time. For income-focused investors, MLT remains an attractive option in the REIT space. Boustead's strategic move into the Pan-Asian logistics platform represents an exciting growth opportunity. The transaction appears value accretive based on the pro forma numbers, and the expanded geographic footprint should provide more stable and diversified earnings. This could be a catalyst for further share price appreciation. As always, these are just my observations, and you should do your own research before making any investment decisions. The Singapore market continues to offer interesting opportunities for patient investors who look beyond the headlines. That's all for today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and I'll catch you in the next update. Happy investing, friends.